today I'm going to share my dividend results on Arrived, Collab, realbricks, and also just cover a couple other pieces of news, just like I've done in the past. None of these things are a big enough topic for me to fill a whole video, so I'm going to just stick a whole bunch of them together, call it Fractional Real Estate News. Oh, what's up, YouTube? It's Joe Catchpaglia sitting on the couch, making some money, investing in fractional real estate as usual. I forgot to say online. It's late, so I'm going to do the best I can. The first thing I want to mention, so Mogul put out a new listing a few days ago, the Nash. This is the first one in a while that I've missed, so I didn't do a due diligence video on this one. It sold out incredibly fast. You can see it says, not a ton of investors in it. So I think some people made some pretty big investments. So I didn't dig into this one at all because I missed it entirely. Just because there's I've been busy, and then there's a lot of stuff to cover as far as fractional real estate stuff. So I just wasn't paying as much attention to Mogul when I should have been. One of the things I thought was interesting, though, is so this is one that they're doing a renovation, and up until now they've been giving us a picture and a floor plan, and sometimes the picture is just an old one. This one you can tell it looks like it's been like an enhanced, maybe what they're expecting the after to look like. I'm not positive on that, but they did give us these, and these are things that I get every time that I've used an architect or a designer for a renovation. They sort of give you, these ideas about, okay, this is what the finish levels will look like. This is a general idea of, the major pieces of the renovation. So I thought it was nice because last time we had the webinar with them, somebody had asked for more details about the renovations. I know it's something I've asked for in a bunch of the videos that I've mentioned. I'd like to know more. So it's great that they're giving us a little bit more of an idea of what that's going to look like when it's done. Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please do your own due diligence on all of those platforms and any of the properties that you hear me talk about. Just because I'm investing on them doesn't mean that you should. I'm sure we have different goals, different risk appetites, all those sorts of things. So please just do your own due diligence. Also, in the description of this video, there's a link to the Discord channel I set up. We have a couple hundred people in there already, a lot of people lurking, but quite a few people sharing ideas, thoughts, strategies, specifically about fractional real estate across a whole bunch of different platforms. There's no cost to you to join. It's not a sales funnel. I'm not going to DM you trying to sell you anything. If someone who looks like me does DM you trying to sell you stuff or get money for any reason, please report that person because it's a scammer. We've seen that a couple of times. But yeah, feel free to join, and just trying to build a community so we can share ideas, share information, and maybe sometimes approach some of the platforms as a group and say, hey, we think you should do this or that, or just trying to make it so we can make it easier for all of us to make money in the fractional real estate investing space. All right, so jumping into it, like I said, I'm going to cover several different topics. But first, my Arrived dividends. I haven't been investing on Arrived for long. It's one of the platforms I have the least money in, but since their secondary market opened up, I've gained a little bit of interest. One of the things that I thought was kind of interesting about this is their annualized yields that they're showing me are not the same as what I calculate. And so, and actually I think, so I, doing a little math, and I've got my Collab ones before this one. So, this is the Tilly. I invested $100. Okay. So they're saying on average, I got 5.2% annualized. I'm not sure what they're doing. But so this is, the Tilly, I invested $100. I got, oh, wait a minute. Why does that say, right here. I received 39 cents, multiplied that by 12, divided by my investment, and I have 4.68% is my yield. So I'm not really sure what they're doing differently to annualize this. I don't know, the same thing. I've got the Jupiter. I bought $969 worth of this one. I got $3.90 this month. That to me ends up being $4.83. So I don't know. Again, I don't know where the discrepancy is. how they're annualizing a yield that, when you're getting a monthly payment is pretty straightforward. And I'm fairly certain that I own them long enough that there shouldn't be some weird thing going on where I didn't have it for that whole month or anything like that. But so all three of those, and then the Pebblestone, invested $90.78 and made 36 cents right there. So again, for me, I'm just not sure what they're doing, where they're getting this number from. Oh, okay, I see what they're doing. So they're not annualizing. They're annualizing all the dividends that I receive, not just annualizing this month. That makes more sense. This is me just annualizing this month. I'm not taking into account that it's and it's because they all fluctuate a decent amount. Okay, makes a whole lot more sense now. I should have figured that out before I got on here. But so you can see, none of those are particularly strong. Although one of the things I thought was kind of interesting is these are all higher than, if you watch my video on the ARC 7, their dividends, their total portfolio has a lower average than these, but only because, again, I bought all of these at a discount. Now, I think probably my arrived deals are my lowest average yields of anything that I'm buying, but I am, I'm combining that with buying them at what I think is a good discount to the real world value. And so I expect when the properties sell in real life to get a decent profit based on, on that discount that I'm buying as well. But yeah, on a cash, annualized cash return, definitely my worst performing portfolio is arrived. I've also only been investing on, it's one of the shortest ones I've been investing on as well, though. So the next one, Collab, I've owned these two properties on Collab. The Spruce, and these were just reward shares. So I'm still putting them in as $50. I guess that's not completely fair because I actually didn't spend anything on the Spruce. But had I paid, the actual price for these, I'd be getting a 5.52% because I received total dividends 38 cents, but that's adding all the ones that I received. This month I got 23 cents, so makes it a 5.52% return. Mine, 33 Mine Street, this is the one that I've owned the longest on here, and I got a $5 dividend. They've been consistently paying out the 7.5% annualized return on this one. They only give out actual data on performance quarterly, and I haven't seen the one yet for first quarter of this year. I'm guessing we're going to get that one pretty soon. But I don't know. I've complained about a lot about Collab, about them not answering questions, not giving me great detail. When I'm looking at their financial statements, not being able to really tell, should it be able to pay out the dividend that it's paying? But so far, this 33 Mine Street has done perfectly well for me. So over time, I might start to trust them a little bit more. Most of their platform has deals that are, their stated yields are very low. Like I think the Spruce, when you look at it, I don't think it's telling you it's doing any better than what I'm actually doing. Okay, projected annual return 5.5%. What did I say? Yeah, 5.52. So I mean, a lot of them say 4.5, 4.8. So they're just not high yields to begin with, or I'm not expecting it. And so had been sort of avoiding them because of that and because of the other issues that I mentioned. But over time, if they just keep pumping out returns for me and I'm happy with them, and as we start to get, as I get more quarterly reports, if it start, some of them in the past have looked like they were paying out even though they weren't making money. I know the last quarter it looked okay to me, so maybe that's going to continue. We'll see. Anyway, that's at least a little bit positive on realbricks. Let me log you out so quick. Even though I own some of the Jameson and Macallan, neither of those are paying dividends yet. So the Garrison's the only one that I have. I have $150 worth of shares, but I really only paid $100 because I got $50 in bonus shares. So when I look at my dividend on that, I'm actually getting 6%. If I had paid full price, though, so far my annualized yield would be 4%. It's a great illustration of why I'm just taking advantage of these discounts, right? Like when I bought, I mean, that was obviously one of the best ones, right? I bought $100 worth, got $50 in bonus shares. That's with the initial referral link. To me, that's pretty much a no-brainer. I think the risk reward makes a lot of sense with that. The next two I invested in was just because they were doing this by, if you spent $1,000 worth, you got an additional 10%, $1,000 or more. I think this was last month or the month before. I guess this was last month that this happened. And so, obviously much less than the 50% bonus, but a 10% still made me think, okay, let me give it a try. But, they're not paying out yet. And that's one of the things that I haven't talked a lot about lately, but I know we've talked about on this channel a little bit, is, the timing of the timing between making your investment and when you receive your first dividend, can make a pretty significant difference in your returns initially. And so I've noticed a lot of people, talking about that on Mogul specifically, where, some of the ones they buy, you don't get your first payment for like 3 or 4 months. And I think, yes, it has a huge impact on your first year's your first year's yield. But over the holding period, I think it's going to have such a minimal impact on the, your overall investment return that I'm not terribly concerned about, okay, it takes a little while before that first dividend happens. Now, it depends on what a little while ends up being, right? And also on how much of the investment returns I expect to come from the yield versus appreciation over time. And so, I don't know, I just wanted to mention that. Whenever possible, I do wait to buy properties until they're closer to paying a dividend. But like on Mogul, like obviously you couldn't do that for properties like the Nash. But some of these that have larger amounts to sell out, like if you could have bought the Bosworth, I think last month, right? Or maybe, I don't know when it came out exactly, but obviously there's a lot to be raised still. And so you could, there's some benefit in just waiting until it's closer to selling out, but it's not such a huge benefit, but it's something I just hadn't talked about in a little while. So that's all, how all of my dividends are doing. Collab is basically, they're some of my highest yielders. I guess when, I should have done this with the ARC 7 video, but that one was a little longer because they give out a whole bunch of details each month with their dividend report. But I think mine on there was it was in the 7s, my average. So, I don't know, maybe I should be adding these together, right? Add the 23 cents to this, because this came for free as part of my $800 investment. But it's not, again, not a huge deal, but it does make it so that these deals look a lot better than whenever you can get some extra bonus shares or extra discounts or whatever they are. That's one of the things I'm trying to take advantage of more and more, and why even on a platform like realbricks, where I'm just not willing to put a bunch of money on any of their deals, when I am going to get, because and I'm going to actually talk a little bit more about these two deals, but if I'm getting, this 10% extra, made me think maybe this makes sense. I don't know if you're getting realbricks emails, this update, we're 18.6% discount. These are starting to really bother me because I did a couple videos about these before, and I just don't think that they are. I mean, they're not lying, but it seems like it's pretty deceptive what they're saying. They're saying, okay, the listing price for the two newest properties just increased by $5,000. So that means we're getting an even bigger discount than we were getting before. Okay. So if you really read that and understand, the price didn't go down, right? We're not getting a bigger discount. These are being purchased for $215,000. Initially, they were being purchased for $215,000. So what are they talking about, right? They are actually just talking about this listing. So the price of this listing went up. But this, this is the listing they keep referencing when they talk about, where am I going here? When they talk about, the list price. But it's not, so this is the development where they're building in. These are the only 3 listings for properties that are the same size, right? So, and this is the floor plan, this is the floor plan that we have under those 2 under contract, but both of these are built by the same builder in the same development and the exact same square footage, 1,294 square feet each. They're all, they're just different, they just have slightly different plans, right? Like the looks of them are different. But if you are somebody shopping for these 3 homes, I just cannot believe that you're going to spend $50,000 or $60,000 more for this particular floor. Oh wait, actually, sorry, I'm pointing at the wrong ones. It's this one, and this one, and so it's this 307. All right, well now I look like an idiot. The way Homes.com works, I can't sort out this 1450. I can only sort by from 1250 to 1500, so that's why that was on there. So sorry about that. So it's this one. So this is the listing they're talking about. It's at 307. But these ones are virtually identical homes. And okay, that makes more sense. This is the Ashburn. This is the Ashburn. This is the X40A Ashburn, right? So, okay, maybe there's something a little bit different about it. But when I look at the pictures of all of these, like the cabinets on this one are dark and they're white on those 2. Like there's nothing that creates $40,000 or $50,000 in value that I can tell between this one and the others. And to dig into this even further, right? When I look at solds, and so now I'm looking at all the last 3 months of solds, properties that again built by the same builder in the same development, the same exact square footage. What was their last list price? And because Homes.com is only giving me the last list price, it's possible they bought it for, even a discount to this price. But you can see, okay, ones that are sold, 266, 273, 257, 261, 238. Just making sure that's, and 243. So, none of these sold anywhere near that 307. So yes, did this list price move up 5,000? That seems true. Is there any reason to believe that has any impact on the value of this property? I think it's none, right? Like I don't think we're actually getting any greater discount. Like we're getting a discount from list price, but I don't think we're getting a discount to the value or to what other people are paying for similar homes in this development. So, that's just, that type of marketing just really rubs me the wrong way. When it was at 16% before, I put out that video and, did some similar math. But now they're like, oh, now we're getting an even bigger discount because that list price went up. Even though there's 2 other list prices of, almost the same property, it just makes no sense, right? But I think if you look at a lot of their commercials, like if you see them, I know I get them on YouTube quite a bit, is they almost seem to be targeting people who are bad at math or who are not interested in math. Like if you look at the things that they talk about, and I don't know. It's this stuff it starts to get to me when I see things like this. Again, not factually inaccurate. Somebody did raise the price of this listing, but practically speaking, I don't think we're getting any more value than we were before. I don't think, I know nobody's paying this much for one of these properties. Nobody has in the last 3 months anyway. Like as I scroll up, even, I mean, this one's even, 150 square feet larger, and somebody paid 248. I mean, none of these are selling even close to that 300 price point. But, and I do want to be fair, I still think, yes, this 215 purchase price is a big discount. And when they're calculating the 18%, which I think is a fair way to do it, they're actually calculating once you add in all these costs. So they're saying the list price versus this total cost, which includes our purchase price, the improvements, closing and offering costs, and the realbrick sourcing fee. So this number is still 250, which is below all of these listings and below, all of them except for this 238 and this 243. I don't, and again, I don't know, maybe the people who bought these got a little bit deeper of a discount. I don't have any idea if that's true or not. Because all we know is the last list price before it sold, not what it actually sold for. But I think, we are, that 215 is clearly a nice discount. The 250, once you add all the costs in, well, some of this is improvements to the property, and realbricks, they have to make some money. So I'm not expecting to get, the best deal when I'm buying fractional real estate. Like it is, the platform has to make some money too, but, and if they can't figure out a way for them to make money and me to be happy with the returns, then that makes sense. But what I just don't like when they try to make it look, when they use math to try to trick you into thinking it's a better deal than it is. Like, it's just, I mean, the fact that they're like, it changed and now it's a bigger discount when we're still paying the same price. It just feels slimy to me. Anyway, that's really it. I'm curious, how everybody else did with their dividends. If you're on any of these platforms, feel free to share in the comments or, jump in the Discord and share how you're doing on any of them. I am curious if anybody that's been on Arrived for a long time, is this what your annualized yield looks like? Is it somewhere in the fives? Is it worse than that? I can imagine if you were buying IPOs for a while, it might be even worse. None of these are terribly exciting. And one thing that I want to point out, because I always am going back to Mogul. If I just look at my pad splits on Mogul, I'm crushing all of these now, and that's all I'm buying on there for the foreseeable future, right? When I throw in my short-term rentals, then I'm doing significantly, then it looks the same as Arrived, right? Like I'm doing pretty bad because I've got all these zeros thrown in. So whenever I'm complaining about like the 8% projected pad split return on some of the newer listings, just, it's one thing to just think about, well, yeah, but on pretty much every other platform, I'd be happy to be getting that high of a yield. And then, also too, when I complain about Lofty, I know there are some deals on there where we're still getting pretty high yields. My qualms over there is the risk associated with that yield, right? We've seen a lot of high yield deals, their yield just disappear overnight. Huge capital losses, stuff like that. So, the risk for return, the risk adjusted return is not necessarily there. I don't know. Although I think that it is for some deals, which is why I'm also still on that platform. Anyway, I think that's really everything I wanted to cover for today. Like I said, curious how everybody else's portfolios are doing. If you've been on any of these platforms for a while and you want to share, or you have different properties and you want to share it, I'd love to hear about it. Like I said, jump in the Discord or in the comments to hear, or I know some of you just like to DM me, and that's perfectly fine too. I do just think the more we share all this stuff publicly with each other, the more that we can, grow as a community. Anyway, until next time, I'm just going to keep making mistakes so that you don't have to.